Let's put on our reality lenses and figure out when it's time to start funneling our money toward aesthetically pleasing investments that could go on our wall or a side table. I asked Clark Kendall, a wealth management expert and the president of Kendall Capital, for his thoughts. He didn't mince words. Clark, when your younger or middle-aged clients come to you and ask you, where should I be putting my money? Yes, in my 401k, yes, in my, let's say, Fidelity account, but should I be investing in art? Do you tell them that's a good or bad idea?
That's a great question as far as the art market. I think all investments boil down to a simple concept, and that concept is a return of cash flow and the predictability of cash flow. If you're going to buy 100 head of cattle, I mean, what's that cattle worth today, and what can you sell in the future? I think you should actually view art along the same lines as buying a raw piece of material. I mean, what can you sell for in the future, and how predictable is that future sale in the future?
You brought up the word predictability in there, and predictability is not something necessarily that artwork that you're investing in today has 20 or 30 years down the line when you might be thinking about selling it.
That is 100% correct. It becomes very unpredictable. Even raw land. I mean, you buy raw land hoping that a city, the development will come out to the country. You just don't know when that's going to happen into the future. And so it becomes a very unpredictable.
The thing I wonder, though, is let's say somebody decides, I'm going to strike out on my own, do something that's non-conventional. How much would you recommend we have set aside already in a 401k, in a markets account, before starting to put any more chunks of money into what we would consider an investment?
Well, I think that varies from person to person. I live by the golden rule to learn to live below your means. And quite frankly, whether you work as a school teacher, a policeman, or a fireman, as long as you learn to live below your means. You know, I like to live by the philosophy, save 10%, give 10% away, and live at 80%. And then I think that's a way to create long-term financial security. So we just had a client last year die at 93. His wife, when they were in their 20s and 30s, saved 10%. They were only making, combined income of $20,000 a year, but it's amazing how quickly that all adds up. And he died with a portfolio over $3 million.
Wow, so he put it in the market.
He prudently saved a majority of it in the stock market.
Where does art fall on the spectrum for you, in the 1 to 100 of good ideas?
99. I don't like that predictability of the cash flow. And I think that there are 98 great investment opportunities before art for most millennials, for most people, with less than $50 million. I think it's a rich man's sport, and it's rich man's entertainment. And I really don't think the middle class millionaires should be participating in that type of investment.